Hi everyone, it's me, Sommers, your local Los Angeles luxury realtor. We are at the start of 2022, and today I'm going to share with you my 2022 forecast for the real estate market here in Los Angeles. You're not going to want to miss this. If you haven't subscribed to my YouTube channel yet, please take a moment to click that subscribe button below and the bell for updates, and I'll be right back. Hi everyone, it's me, Sommers, your local Los Angeles luxury realtor. We are at the very beginning of 2022, a brand new year, still dealing with pandemic issues, still many people struggling with some backlog on their homes and just job security, but a whole bunch of you are now working from home and things have radically changed in the workforce. That being said, I want to go over what my actual forecast is for 2022. Now, there was an article in December last year, December 2021, that talked about the decline of homes and sales in the real estate market here in Los Angeles. I want to kind of help put that in perspective. First of all, that was just to keep you reading, because the reality is Los Angeles is huge. Southern California is Los Angeles, but also Orange County and going into San Diego County. And to put that in perspective for those of you that are either new here or watching this from like the East Coast, that area is basically the combination of the state of Georgia and South Carolina put together. It is a huge area. So again, headlines, some of that lead in for the story was really about getting you to read the story. So I really want to share with you what is going on before buyers that have been either waiting on the sidelines or have missed the opportunity to buy because they've been outbid, sit out this market and think, I'm just going to wait for it to crash. We are not crashing, okay? All economic predictors are really pointing to the fact that this historically long and strong seller's market is going to continue for the next 3 to 5 years. One of the key indicators in this is the way hedge funds are buying into real estate. And if you know anything about hedge funds are not about losing money. They go for the safer investment. They're moving big group blocks of money into investments that are going to prosper because their goal is to make money for their investors. My personal prediction when it comes to 2022, we are still going to see growth in equity of homes. We are still going to see multiple offers when it comes to homes, condos, and even leases. That's right, you heard that right. Last year, not just homes were receiving multiple offers, condos were receiving multiple offers, very, very common. And even leases, you literally are up against competition when it comes to housing, no matter what you're buying. I believe that is still going to continue. Now, of course, nobody has a crystal ball, and there's always economic factors, political factors, or world effect factors that can, change things dynamically. But one thing we've known for sure and seen for sure that this pandemic has actually caused the real estate market to continue to grow. It has continued to move forward. Property values are continuing to increase in equity. You're making out. If you bought a home last January, you have equity in your home. To think that there's going to be some type of crash that's going to drive the prices of homes down, I just don't see it. And I'm going to give you an example of a conversation I literally just had yesterday. If you're someone that's saying, I'm going to wait for prices to drop, you're going to wait a long time. So let's say, just keeping in mind what I shared earlier, that a lot of forecasters who have predicted accurately what happened in the market because of the mortgage meltdown are saying 3 to 5 years of this continuous growth and seller's market. So if you wait 3 years or 5 years and property values increase 12% to 20%, let's just go 20%. In 3 years, when you're ready to buy, that same property that you could have purchased today has an increase of 60% in value. Are you really going to be ready at that point to buy the same property for 60% more of a price? Because the price is not going down. It's not about to drop. First drop of sales since June of 2020. Now, let's talk about some possibilities of why. Buyers have burnouts. They're constantly against competition. It gets emotionally frustrating to lose over and over. And granted, that's part of the very nature of this particular market. And sometimes it's about your agent, but I don't want to throw all agents under the bus, because when one person is winning over 25 offers, there's 24 agents that are losing, no matter how good they are. And I've even been one that has fallen into that category at least once. The compliment, though, was the agent on the other side telling me that my presentation was the most professional she had received, but for XYZ reason, the sellers chose the other person. And the reason, honestly, was that the buyer had shortened their contingency periods and did what I was trying to get my own buyer to do, which was go with a lender that could close in 21 days, and my buyer just wasn't willing to do that. So there's just certain things you can't compete against. Needless to say, this article has had some people thinking, oh, the bottom is about to drop. And it just really isn't. 6.6% over 1 month versus continuous growth month after month is not much of anything. I just don't know why someone would say, well, if you're telling me my home can sell for, let's just say 1.5, but Zillow's telling me 2.5, I want to list it at 2.5. And what happens in those circumstances? In order to get a sale, they start price dropping. This is not a sign that the market is declining. This is a sign of price correcting. This is a sign of reality. This is the sign that they are pricing it accurately in order to get that sale. One of the other things we've seen here and there last year, which I do also believe contributes to this quote unquote decline that the Los Angeles Times reported, which was literally just 1 month of a 6.6% decline, is that there's still high demand for property in most areas, but low inventory, meaning not a lot of homes on the market, right? Now, let's kind of think about this for a second. If you take a neighborhood where homes have not been on the market for a very long time and properties start to come on, they're move-in condition, they're getting offers over ask, it shifts things a little bit. And I'll just give you kind of a more clear example. Let's say there's a single family home, about 2,500 square feet, 3-bedroom, 2-bath. And it came to the market at 1.3. Maybe the kitchen was updated back in the early 2000s. They had carpeting in the bedroom, wood floors, and everything's been kept in pretty good condition. The sellers have been, really good about keeping their home up. It's basically move-in ready. You can make adjustments if you want, and it might not be to today's current market trends as far as, interior and kitchen trends and bathroom trends, but they have been updated. They're not from the 60s. They've been updated. So this property goes into competition, and there's 20 buyers clamoring, and then the top ones start to emerge, and the person who eventually gets the accepted offer went $200,000 over ask. Property was listed at 1.3 and sold at 1.5. So what happens 2 months later when a home that's about the same square footage, maybe it's 2,600 or 2,700 square feet, 3 bedrooms, 2 bath, also has been updated in the last 20 years and is move-in ready, been kept in good condition. Do you think they're going to come on the market at 1.3? No, they are going to come on the market at 1.5. That doesn't mean that there's a drop in the market. That just means that when one property sells, it becomes the new comparable, okay? And so the next property, the agent has a choice and the homeowner has a choice to either list it at what that last property sold or to maybe go a little bit below and see if they can get more. I mean, there's different ways about this, but at the end of the day, what one property sells for in the same type of condition, the same type of size, square footage, the same neighborhood, the same location, it impacts the growth of the neighborhood. I do very much believe that in 2022, we are going to continue to see multiple offers. We still have low inventory. We still have very low interest rates. Yes, the Fed is determined to pick that up. Yes, we're starting to see some inflation. I do believe we will still have competition though, because there are still people that need to buy homes. We might not see 20 offers on every home anymore. We might see 7. But it's still competition. You still, when you are buying a home, have to beat out somebody else's offer. You still will most likely have to come in over the asking price in order to get an accepted offer. And this is not something that I'm saying or any other agent says because we're trying to spend your money. Part of our responsibility to you when we are helping you buy a home is to get you the home you want for the best price. I personally never want my clients to overpay. I'm very diligent about doing a market analysis. And if we need to go above what the analysis tells us, That's a conversation we're having. I want to let you know, look, you're about to offer $1.7 million on this property. It was listed at 1.5. Comfortably, my analysis is telling me 1.65. So that $50,000 more that you're going to come in with, it may or may not appraise. And again, it depends on what you are doing. If you're putting down 20%, you might not care. But I always want my clients to be aware of, there's some areas here in this process that could go either way. It could appraise, might not. But you have to be informed. You need to know what's going on. And that's part of my job, is to educate you as much as possible. This is something I still believe that's going to happen throughout 2022. We are still going to see properties going under agreement for higher than their asking price. I have a colleague that has a condo listed, low 600s, already has an offer at 690 after 2 days. It's happening in this market right now in 2022. So what's my bottom line for my forecast for 2022? We are still in a very strong seller's market. We are still going to see equity increases. We are still going to see multiple offers. You are still going to be paying a premium for the home you buy, but rest assured that property value is still going to go up. So if you are a buyer out there thinking, I'm waiting for a huge price drop or foreclosures, you're going to be waiting for a while. This is not the year. But if you are finally ready to buy, there's a way to go about this. And so just to give you some items to tick off to be prepared to buying a home, first thing, get your pre-approval. Now, I say first thing, but I think that ties in with the second thing, which is hire a real estate professional. And honestly, when you're working with a real estate professional, most of us have lenders that we've done business with repeatedly because we've had multiple clients work with specific lenders, and we know who's going to deliver from who's not. So you really should talk to a professional, pick your professional, talk to their preferred lenders, the lenders that they recommend as an A rating that is going to get you through this deal, because trust and believe, this process can be stressful. You will always be asked for information at the most inconvenient times. You want everybody working as hard as possible to make this process as smooth as possible for you. So do that, get your real estate professional, get your pre-approval, get out there, look at homes, start writing offers, and move into your new home and start building equity today in 2022. One more thing I want to say about my market forecast right now. Really, time is of the essence. And why do I say that? Again, I'm going to default to something I said earlier. Inflation is starting to happen. Interest rates are still relatively low, but you need to understand the impact of interest rates. So let's just say you're buying a property, I'm going to use pretty round numbers, for $1 million, and your interest rate is 3.75%. Your payment before taxes and insurance is about $4,631. That's before the taxes and before the insurance. So, you're going to have to factor that in. So let's say interest rates creep up 1%. And by the same time next year, they're at 4.75%. That same property selling at $1 million, or let's not say the same property because it's going to be a different property selling at $1 million, but a property selling at $1 million with an interest rate of 4.75% is going to have an increase. Your payment is no longer going to be $4,600. You're going to be looking at $5,216 and about $16. So that's like an $800 price increase, right? That's pretty significant. So for some people, interest rates puts you out of the home you want to buy. And using, again, those raw numbers, $1 million, if you're buying a $3 million home, that's an increase of, what is that, $2,800 on your payments. So buying when the interest rates are as low as possible is always the best move. You have to do what's right for you. I'm Corrie Sommers, your local Los Angeles luxury realtor. This is my market forecast for 2022, and I am always here as a resource to help you. If you want to schedule a consultation, I have a link below for that. If you are considering moving to Los Angeles, I also have a link for a relocation guide. And please, if you're in Los Angeles or thinking about selling your home, moving somewhere else, I also have a number of videos on the various neighborhoods here in Los Angeles. Go ahead and check out that playlist, and I'm always here to help. Thank you guys so much for watching. If you haven't subscribed to my YouTube channel yet, please take a moment to do so. Click that subscribe button and the bell for updates. I have more videos coming every single week here on real estate to financial freedom. See you soon. Hi everyone, it's me, Corrie Sommers, your local Los Angeles luxury realtor. We are at the start of 2022, and today I'm going to share with you my 2022 forecast for the real estate market here in Los Angeles. You're not going to want to miss this. If you haven't subscribed to my YouTube channel yet, please take a moment to click that subscribe button below and the bell for updates, and I'll be right back.